Good morning, everybody. This is Steve O'Hare from Signal Centre, and today is Friday, July the 2nd. It's 8:51 in the morning, and I'm on my own this morning. Joe's left me. He's gone fishing for a whopper, I expect. I'm going to run through the market highlights first, and then we can dive into the charts. A couple of interesting things overnight. We've got Chinese equities have taken a bit of a slam dunk. We'll get into the details of that. They were dealt a blow overnight with the CSI falling by the most in 3 months, thanks in part to growing fears around monetary tightening in the region. Weakness in Hong Kong and China also came as a result of comments from President Xi Jinping, who warned that anyone attempting to bully China will face broken heads and bloodshed. That's a bit scary. Later on, we got US data releases, NFP later, non-farm payroll Friday, and we're looking at figures, expectations coming around about 600, 700,000. However, ADP earlier this week showed payrolls falling, albeit less than expected, and the employment element of services and ISM and PMI weakening. There are questions around whether this figure will be hit. So maybe not as high as 600, 700,000. The dollar recovered from a limited intraday retreat to post net gains. Dollar yen posted 50-month highs above 111.50. Euro dollar was unable to regain ground above 119. Sterling dipped after dovish comments from Bank of England Governor Bailey, and cable was below 138. Commodity currencies were dragged lower by the stronger dollar, but they seem to be holding up pretty well. We'll look at the charts. Oil prices surged, and on OPEC restraint, optimism before pairing gains after the scheduled meeting was postponed. So we've seen energy prices have enjoyed a strong end to the week so far. A Russia-Saudi agreement to raise production by $400,000 per month has been blocked by the UAE. So this will be one area we'll watch closely. So how about if we start there? Let's take a look at oil, crude oil we're looking at. Let's talk about commodities first. So in weekly chart, we're looking at crude oil. We think we're in the fifth and final wave. We think the fifth wave should stall around about levels we've just seen. We had this band of resistance starting between 75.85 all the way up to 79.32, and the previous swing high going all the way back to October 2018 is 76.80. We've just touched on this chart. We've hit a high of 75.67, which is very close to the start of that band of resistance, and we've rejected it. However, it still looks pretty positive. And with that news out from the OPEC Plus nations, or the meeting getting cancelled, this continues higher. So no real slowing down on that. We can see on the 4-hour chart, we had a bit of a reversal, bit of profit taking after hitting that resistance. On a support point of view, we think support's coming in around about $74. 74.66 trading currently. That'll be the area to buy dips. Decent volume on that uptick as well. So really looking pretty good from that perspective. Looking at gold, what's going on with gold? We've got the dollar strengthening, but gold seems to be holding its nerve. Whether it'll come to, I suppose, non-farm payroll this afternoon, really. We normally see gold react to that quite aggressively. So maybe we're waiting for that. But really trading within a range between $1,750 and $1,800, and smack bang right in the middle. So I wouldn't be surprised to see a pretty decent candle today. This is the 4-hour chart. Looking on the daily chart, we're looking at this sort of bearish flag formation. Really, it's not really playing out the way we expected it, but it's still a channel that we're expecting to move to the downside. Really need to get a clear break of 1750, and a close below there today would be significant and would really tell us we're going to target 1675, which is what we've been expecting. You can see the momentum is slowing down on this sell-off, so that's one to watch. The bulls will be pretty happy about that, but they need to recapture ground above $1,800. If they don't, they are still in trouble. Let's go to talk about cryptos. Why not? Not really a lot going on here. Cryptos, we are in a corrective formation, the wave 4. This is turning into a bit of a sideways correction before we expect the fifth move or the last wave lower to continue. We're looking to really see a break of 28,780 around about there before and a close below there before we can confirm we're in the fifth and final wave of this move lower. Up above around about 36,000, that's forming decent resistance, and the 32,000 level is where buyers are coming in at the moment, but we're still negative on Bitcoin and the cryptocurrency block as a whole. Let's talk about indices now. So indices had a pretty decent move yesterday. Then we saw a sell-off in the afternoon, and let's drill down to the 4-hour chart. Dips continue to get bought. What more can we say? FTSE performing pretty well because dollar's doing well as well. So that's maybe a different bit of an outlier. We've seen DAX backwards and forwards and pretty volatile even this morning, with sell-off down to 15,600, 15,700 is the high, forming a bit of a bullish candle. So indices taking a sort of a lot of well, if we look at the Asian Pacific, that's struggling, but the US and the European indices are performing pretty well. Looking at Dow Jones, we're clambering and looking towards heading for new highs. We haven't got there yet. We're still a couple of 100 points away. NASDAQ, not so far away, still looking really good and no holding it back. S&Ps, again, overnight, we formed a new all-time high, coming in now at 4,327. So we're not far off it, and we're looking to move higher. Again, dips continue to get bought. Non-farm payroll, as we say, could be a bit of a volatile event, and we'll see where we go on the back of that. No one really knows, and it's always a bit messy on that day. On the Asian Pacific, that's taken a little bit of impetus from the commodity sector. Commodities looking pretty strong. We can see what happened to China 50 overnight. And as I say before, China 50, I believe, will lead the way lower in the indices when we do decide we can have a correction. No one's letting it happen yet by the looks of things. Hang Seng obviously took a bit of a bloody nose on the back of that as well. So not looking great from that perspective. Nikkei held on. Japan, obviously, a different ball game. So let's dive across to the FX. Obviously, Joe normally covers this. I haven't really looked at FX for a while, but been following Joe. And we can see, obviously, euro-dollar breaking down through support. On the intraday trade idea, we're looking at actually selling. Let me just get this chart up. That's a bit better. We're looking at selling a break, and we're live in that at the moment on euro-dollar. That was about 1835, I think. So, but volume's dropping off here. So maybe it'll be short-lived, but it's definitely a move we've got our eye on, and we're looking to really a next line of support from a technical perspective is around about 117, the figure. So looking a bit bearish there. Cable, we're not so bearish about, but we have got to appreciate that it is under pressure as well with the dollar strength, but it seems to be holding up a little bit better than the euro itself. So obviously this reflects back into euro sterling, where we're seeing this a little bit more negative this morning. We look to be breaking down 85.92 support. We've got the cloud below, and below that, if we get below there, we're looking at 85.64 as resistance. Above 86.15 is the resistance. Again, we sold this morning on the intraday trade idea at 86.05, so a little bit on the side, looking quite nice at the moment. Dollar CAD looking pretty positive. Again, we've got resistance really coming in around about the 124.50 area and support at 124.28 before we really see that the interim support, which I'd put more focus on, down at 123.56. Obviously a level to watch if we do break the highs today. 124.87 was the swing high on the 21st of June. Let's look at Aussie dollar. And we've seen this also break support 74.77. We've broken and looking pretty rough down here, looking really sort of like not seen these sort of levels since December last year. So we expect a little bit more follow through on the downside, and that'll be one to watch today. Dollar yen is I think we sort of, where did I read? It's like 15-month highs. I think we mentioned that at the start. Let me just get my sheet up. Yeah, posted a 15-month high above 11.50 and sitting quite nicely above there. It has been quite an acute angle for a market to move in. So any pullbacks would probably find support around about the 111.12 area, but that seems to be soldiering on. And we're looking at, on weekly chart, if we look at levels above 112.15 to 112.40 as in terms of resistance, but really has broken above this downward trend resistance line, which we highlighted weeks and weeks ago, and looks to be kicking on. So dollar yen strength looking pretty good there. 112.40 really a target now. So gun to head challenge from yesterday. Joe will come back to us on Friday. That's the one area that I don't really get involved in. I think I was stopped out, unfortunately. But what am I looking at today? For me, gold is an interesting one. I am short-term bearish on gold. We are in this channel area, but I do expect the volatility to come in. And if I was to be able to place a trade around the non-farm figure, I'd be looking to sell this rally just in front of 1800. However, we have to have a gun to our head, so I am going to buy gold, looking for this little jump up. I'm going to keep quite a tight stop, really looking at the last this 4-hour candle that we're in here and placing a stop just below there. Not getting too excited, but that's a sort of level I want to. Oh, I like that. Why don't we go for that? That's only a 2-to-1 risk reward. We're getting long here. The stop is at 1773.29, the target 1787.69. So quite a tight stop, but it's only, I'm thinking we're going to see some strength into gold prior to the non-farm payroll, and then we'll get some excitement. So that'll be all good. As we say, the day ahead, we're really focusing on the non-farm payroll, nothing else to really distract us too much. Let's be very careful out there. I always find non-farm payroll days are generally I lose money on them. So, but hopefully this gold trade will discount all them losses I've had before. But it's such a volatile time. You've got to be really careful, be very strategic, and realize that even if you place your stop at certain levels, you can get a gap through that market, and you could easily get stopped out at worse levels than you anticipate. So be very, very careful. If anything, let it settle down, let the market move to where it's going to move to, and then digest the information and then formulate your trading strategy then. Good luck today. Hope everything goes well, and look forward to seeing you Monday.